Welcome back to Squawk on the Street. Today's inflation report coming in softer than expected, but prices for shelter, well, they saw another jump, climbing 4% over the last year, and that far outpaces the 2.8% rise for the core consumer price index. Joining us now to talk housing is Zillow Group CEO Jeremy Wacksman. Jeremy, good to have you. And let's get right to that whole idea of renting versus buying, because when I look at the numbers right now in particular, and I'm taking a look here, I mean, back in 2020, it clearly made a lot of sense to buy. You were monthly putting away money that you otherwise would have spent on rent. But things have reversed completely, haven't they?
That's right. Thanks for having me. The housing market remains a bit of a challenge for buyers. And with home prices having run up so much since the pandemic, even when rent prices we're seeing as an increase recently, less than home prices means it's better to rent than to buy in many markets. That said, Zillow Group's results in Q1 grew against that challenging market, up 13% in Q1, with our for-sale revenue up 8% and our rentals revenue up 33%. So even though it's a tough time to buy and it's getting more expensive to rent, you're seeing folks able to do it, and you're seeing them increasingly turn to services like ours to get it done.
Yeah, well, that obviously is good news for your shareholders potentially. But in terms of somebody looking for shelter right now and or wanting to buy, what do you believe is going to ultimately change this dynamic? Is it just all about rates?
Buyers hate uncertainty, right? You saw that when rates were volatile. You're seeing that now with economic uncertainty. But the challenge for buyers and the affordability challenge is really an availability challenge. In the for-sale market, we are probably 4.5 million homes underbuilt. We've been chronically underbuilding since the global financial crisis. And so that has been this accumulated deficit we've been feeling. And now what exacerbates that problem is lack of existing homes coming online as new listings, as sellers feel stuck and in their mortgage rates.
Sellers, they may feel stuck, but isn't inventory of existing homes on the rise at least? And there are more prevailing price cuts than bidding wars at this point. So while it might be tough to be a buyer, I guess, because of where mortgage rates are, it would seem as if things are loosening up. Is that not true?
Yes, we are seeing new listings increase. New listings up 19% in March from a year ago. But it's really important to put that in context. Think about what that listing level looks like from pre-pandemic levels, from the norms when we were seeing 5.5 to 6 million homes trade every year. We're still 30–40% off those levels. And so that lack of new listings versus historical averages is why you're seeing only 4 million and so homes trade on a seasonally adjusted basis. We've been at that 4 million level for quite a while now. That's really the have to move level. Those are the folks that can't put off the move, that have a new job, that have a change of location that they have to get it done. Most sellers are waiting as long as they can to trade out of that mortgage.
Jeremy, when you